What's up, people? So, what is the Dow Jones Industrial Average? Now, that may be a rhetorical question, but if you want to answer, just put it in the comments. Um, so, the Dow Jones is used to gauge how well the stock market is doing on any given day, and it's the most cited index in the U.S. So, if you're watching any stock market news ever, there's going to be a ticker on the screen that shows how well the Dow Jones is doing up to the very second. So, what exactly is the Dow Jones? First of all, it's a misleading name because, first of all, it's not an average, and second of all, it's not all industries. Or rather, it's very few companies of multiple industries. So, it serves as an indicator that I think doesn't really tell you how bad things are or how good things are or what's even going on. So, it's a misleading indicator because there's only 30 companies and they're not weighted in any way. And why that's a flaw is, as you will see later, how they choose the stocks that actually go into the index. On a very basic level, it has basically one stock of each company that's in the index, which means if the index as a whole stays completely even and say Walmart goes up $1, then the Dow Jones goes up $1. Now, it is corrected for stock market splits and dividend payments so that it's comparable day to day, but on the most basic level, and whenever a new company is added, they just add one share. Now, they only add companies when they throw other companies out, so chances are one company has to do fairly bad to get dropped, and one company has to do fairly well to get added, but not too well, as we'll talk about later. So, who's in the Dow Jones Index? And there's 30 companies, as I said, which is also why they call it the Dow Jones 30. And there's multiple industries here, but not all of them. So you have 3M, you have American Express, Apple, Boeing, Caterpillar, Chevron, Cisco, Coca-Cola, Dow Inc., which is ironic, but that has nothing to do with the index. It's the Dow Chemical Company. You have ExxonMobil, Goldman Sachs, Home Depot, IBM, Intel, Johnson & Johnson, JP Morgan Chase, McDonald's, Merck & Company, Microsoft, Nike, Pfizer, Procter & Gamble, Travelers, United Health Group, United Technologies, Verizon, Visa, Walmart, Walgreens, and Walt Disney. Now, what's more important than basically who's in it is who's not. Now, I've named a lot of companies there, and some of which you don't know. I don't know a lot of people who actually know what the Dow Chemical Company does or what it is. You also have, Merck and Company is not very well known. Travelers, But more importantly, there are stocks that are not in the Dow Jones Index that are huge companies. So you don't see Google in the Dow Jones, you don't see Amazon, you don't see Facebook, you don't see basically anything that IPO'd in recent years. Part of it is because of the stock price and the market capitalization. The other is because of how the index is weighted. As I said, they basically throw one share in there for every company. So, if they threw out, say, Verizon, which has a stock price in the double digits, and added, let's say, Amazon, who at some point had a stock price of like $2,000, then the Dow Jones Index would go up like 2,000 points, which is ridiculous, and that's why they don't add Amazon. and Google has a share price of $800, so they don't add Google. So you see all the stock market news and all the companies that are doing well and doing badly during the day, and they cite the Dow Jones as how the stock market is doing, even though Amazon is obviously a far more important indicator on how the stock market is doing than Dow or Caterpillar or McDonald's, Walmart, Walt Disney. Although I can see Walt Disney. So Amazon has been doing huge over the past decade, obviously, and that is not being reflected in the stock market as a whole because it's not in the Dow Jones. So all these people talk about how the stock market is doing, and Jeremy from the Financial Education Channel goes up on how Amazon and Google and Facebook and all these are pulling the stock market up, and you don't see that if you look at the Dow Jones. The Dow Jones is up huge over the past decade, obviously, because 2009 was right after the financial crisis, where it was at like 7,000. Now it's at 24, 25, 26. I don't really care about the Dow Jones because it's basically not an indicator of anything at this point. If you're looking at a good indicator of how the stock market is doing, look at the S&P 500. The S&P 500 is the 500 biggest companies in the U.S., and it's, first of all, a good index fund to invest in. Vanguard has an S&P 500 index fund. It's also a good indicator of how the economy as a whole is doing, because they have all the big stocks that tell you how the economy is doing. They also weight these stocks so that an Amazon is not like 20 times more weighted rather than the rest of the companies. So if Amazon were in the Dow Jones with a $2,000 share price, then how the rest of the companies are doing doesn't really matter. As long as Amazon goes up, the Dow Jones goes up, right? So if you don't have a weighted system to take kind of that whole stock price thing out of that, you don't really have much of an indicator. The stock price itself is completely unrelated to the market cap of a company, and the market cap means the total value of a company, because whenever they issue shares, or whenever they IPO, which means when they issue shares for the first time, they basically have free reign over how many shares they issue, and that means what the stock price is when it comes to the stock market the first time. So if Amazon went public with just 100 shares, then they would be worth like millions of dollars every share right now. On the other hand, if they issued billions of shares, they would be far lower than they are today. So the stock price in a vacuum of any company does not tell you anything. It just, you need to look at the stock price, look at how many shares they have, to see what the value of the whole company is. So that's why the S&P 500, for example, weights the shares in a certain way to make it more representative of how the stock market as a whole is doing. So that's all the reasons why I think the Dow Jones is just a terrible indicator for literally anything, and I'm not sure why anyone would use it for, anything to show how the stock market is doing or not doing or whatever. It tells you nothing. So if you want to start investing, I'm going to put a video up there about how to start investing with $100 right now. And make sure you subscribe. I put out videos every day, so you might learn something.